All right. Good morning, everybody. Good morning. I like it. We're chatty this morning already. Hope everybody's doing all right. Guys, I always enjoy the banter in the morning. Trading doesn't always have to be so serious, does it? Sometimes we can have a good time. Hang out. Claire, I am unmuted and going live on YouTube. It's so funny. Now um, I associate YouTube with you keeping me in check, so thank you. Guys, how's everyone doing this morning? Happy Friday. It's great to see you guys today. Man, we're coming into the weekend. I don't know about you guys. I'm just happy as I can be right now. It's going to be a great day. Um, Guys, what do you say we do what we did yesterday, where we talk about rules and the advantages that they provide? We keep it simple. We focus on the best of the best. We're going to focus on the reasons that a trade has advantages. We're not going to fall into that trap of looking for all the negatives, all those things that don't matter. And we're going to smile a lot because smiling's my favorite and it's Friday. But before we do anything, guys, before we put on that happy face, let's check news. Let's see what's going on in the wonderful world of emotional rich people. 10 a.m. today. We've got the consumer sentiment, guys, and you'll notice that it is a red impact, a high impact news. I'm not concerned about the consumer sentiment. I'm not concerned about what the results are. I'm not even concerned about who's delivering the news. For me, I know that red box means that the market can act erratic. The market can bounce and jump and do all those things that make it difficult to get in, to stay in. So when I see these high impacts, these red boxes, when I see these medium impacts, these orange boxes, that's typically a cue for me that I may need to go refill my water, send my wife a text, pet the dog, whatever, but not put myself right in the middle of what's going on. And then, guys, everything that I talk about, and the longer you spend with me here in this class, the more you'll realize this is true. Everything that I talk about can be found on the education page. I don't hold back information. I don't give you partials so that you have to stick with me because I'm a lonely person. Guys, this is 100% anything and everything that you need. And it all comes right here from the tutorial section. And this tutorial section will literally walk you through getting comfortable with the software. It's going to walk you through recognizing advantages. It's going to walk you through getting into the market and taking advantage. Nice. Congratulations, Elvis. Good job. Don't change your plan because it gets real. I don't give trading advice, but if historical results reflect future potential, don't change your plan because the dollar amounts have an impact rather than simulator. That's typically the biggest pitfall that people get into. It's okay, Ziba. I don't want you to memorize the videos, right? Gosh, that'd be difficult. I don't even have the videos memorized. Ziba, I want you for 30 days. This is it. Gauging by your picture next to your name there, you're what, 22, 23? You've got plenty of time. Let's focus on the 5-1 trend trades that happen after a termination condition on the 13-2 chart. Guys, I talk about these a lot. Focusing on a high probability trade. And I want you to think about what it means to take a high probability trade. It means that every indicator on every chart agrees for a trade. That everything is strong, that there's nothing in your way, nothing between you and your target. Guys, This is a high probability trade. We're going to talk about the rules for it. This is a trade that typically wins 70 to 80% of the time when you follow the rules. Now, if you've done anything in your life, you know that 70, 80% win is a good number. Guys, Major League Baseball players get tens of millions of dollars for getting 3 out of 10. We're looking to get 7 or 8 out of 10. Everything is going to line up. And if you focus on that high probability trend trade for your first 30 days, it's going to do something magical for you. 300 gets you in the Hall of Fame. Absolutely. Then why do we put so much pressure on ourselves to be perfect in something that's really more difficult than baseball? If you focus on the high probability trend trade, if you build a foundation, if you create that solid base from which to grow, guys, you're going to learn how to read your charts. You're not going to focus on being a day trader. You're going to focus on being a chart reader. And being a chart reader incorporates 3 essential elements: understanding where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And these 3 simple concepts are going to have you recognizing the advantages that get you into a high probability trend trade. I know that you're all adrenaline junkies, and I know that you want to be busy, and it's more fun to be in a trade than it is to wait for the right trade. Guys, if you commit to that 30 days, if you keep it simple, if you let yourself be a student, you're going to carry yourself over to medium probability trades, right? And this is when most of your indicators line up for a trade. However, a small issue exists. And this is going to be the vast majority of your trades. Guys, your ability to read your charts will have you identifying that small issue. Your ability to read your charts will be able to get you in managing these trades assertively, identifying trouble spots, knowing when it's appropriate to take a portion of the trade off, and knowing when it's appropriate to get to a 0 loss level. It takes repetitions to get to a medium probability trade. It takes understanding how to read your charts to get there. So guys, I've got 37 people in the room. 37 people in the room on this great Friday morning, and I want you to do me a favor, 37 people. I want you to let yourself be new, okay? I want you to just say to yourself out loud in the room, the dog's going to think it's weird, but it's okay. Hey, I'm brand new at this. I don't have to do it perfect in my first week. I'm brand new at this. I'm still learning these looks. I can't put the pressure on myself to be perfect when I'm learning a new trade. And then the other thing that I want you to do, and guys, I see this every day, and this is what throws people off. I want you to keep it simple. When I say keep it simple, guys, we're looking at 3 rules. Only 3 rules. We're going to look at 3 rules. We're going to have strong trigger lines on a 13-2 chart. We're going to have no termination conditions on a 13-2 chart. And guys, we're going to use a limit order to enter at an area inside of triggers on a smaller, faster chart. 3 rules, 3 looks to get you into the highest probability trend trading. Guys, your formula for a trade. This is simple. A trade equals momentum, a clear path, and an entry area. So all we're going to do is we're going to focus on recognizing a clear path, momentum, and an entry area. And we're going to start on the 13-2. You're going to start on the 13-2. And you're going to use 1 bar on the 13-2 to make a couple determinations. The first thing is going to be the trend of the market. If the background on your 13-2 is green, you're in an uptrend and you're only looking for rules to be met for high probability trend trades long. And if the background on your 13-2 is red, you're in a downtrend. And you're only looking for rules to be met for high probability trend trade short. Guys, what color is the background on my 13-2? What direction is this market trending? Quick analysis. It's down, absolutely. How easy is that? Guys, that's all you need to know. That's the first thing. The market is trending down, and because it is, we're only looking for rules to be met for high probability trend trade short. The next thing we're going to do is we're going to gauge the momentum of the market. Rule number 1 said that we have to have strong triggers. What's a strong trigger line look like? Well, it's pretty easy. I took a couple pictures for you. I'm going to share them in the room. In an uptrend, strong trigger lines mean that the small triggers are above the large are wide, that they're angled in the direction of the trend. This space between the two lets me know that the odds are favorable for the market to continue up. Compare odds favorable to when the smalls return inside. This is weak and anything can happen up or down. And it's the exact same look, whether it's an uptrend or a downtrend. We're relying on that separation between the small and the large to let us know that the odds are favorable for the market to continue in the direction of the trend. And this is where our first advantage comes from, guys, from odds favorable momentum. I want you to look at the current crude oil. Small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Do me a favor and give me a Y in the room if you recognize that we do, in fact, have strong trigger lines on the 13-2. Pretty cool, right? Guys, it's that easy. That's rule number 1, just met, right there. So let's go back to our 13-2 chart and let's see what we're looking for next, guys. We have those strong triggers. Now we're going to make sure that there's nothing in the way. Rule number 2 says that no termination conditions should be present, that I have to have the advantage of a clear path in order to look for an entry. Well, what's a termination condition, guys? It's a simple recipe. Price is going to reach one of these Fibonacci areas. And these areas can be support, they can be resistance, they can be one-to-ones. It can be a divergence low, it can be a divergence high. But the recipe for identifying a termination condition is price reaches an area. If the trigger lines remain above the area of support or maybe below the area of resistance, you've reached an area that has the potential to reverse the market, that may stop the market. You've given away the advantage of a clear path. You can see I put a little stop sign there. No short trades into a termination condition. We want that clear path. When is the path clear? This area of support, when my small trigger lines and my large trigger lines break through that area. Both small and large have gone below support. You can see that it turns red and it acts as resistance. Now the area is cleared. Now you have the advantage of a clear path. So guys, I'm going to ask you, give me a Y in the room. Simple two-step process. Price reaches an area. If the trigger lines don't break, we're not trading into the area. When both small and large get to the other side of an area, we have a clear path. We're going to look for rules to be met. Easy enough? I'm keeping it super simple today. This is crude oil. Price reached support. Trigger lines were above. No trade. Price smashes below. Triggers get below. Oh, man, I hope you guys are watching. I hope my experienced guys are trading. Because when I have the advantage of momentum and I have the advantage of a clear path, guys, you're about to figure out how to get into that absolute best of the best area. You're going to recognize where the market is likely to continue. And by doing so, you're going to enter a trade. You're going to enter that high probability trend trade with the advantage of momentum, with the advantage of no termination conditions, and with the advantage of entering the market where it's likely to continue. So when the rules are met on this broad stroke of the brush, on this bigger, slower chart, going to refine that entry on the 5-1. Guys, what happens in one bar on the 13-2 happens in 20 or 30 bars on the 5-1. This is only an entry chart. Say it with me. I want to hear you in the back row. Your 5-1 is an entry chart. It's not a look for termination conditions chart because what is that? That's 13-2. It's not a gauge the overall momentum of the market chart because that's the 13.2. We're just going to refine that broad stroke of the brush provided by the 13.2, and you're going to pinpoint that area where the market is likely to continue. You'll be able to use a limit order. You're going to pinpoint it with such accuracy that you'll be able to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. It's going to allow you to reduce your risk and maximize your profit potential. So on my 13.2, I had strong triggers. On my 13.2, the smalls had broken through that Fibonacci or that divergence low. Let's look at termination conditions real quick. Just a subtle reminder, what areas are we respecting when it comes to that trigger line comparison? Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, a cyan divergence low, a magenta divergence high, large chart midband. If the large triggers are a full bar away, we're going to look at that one all day long. And then I have one other. And this happens on a smaller, faster chart. Guys, this is the only time I want you looking for a termination condition on the 5-1, and that's any third divergence in the same area. And I'm going to bring up a picture. And for those of you that are brand new, let's talk about what it means to have divergence. I'm sure you all watched the videos, you soaked it in, you went to the glossary of common terms, and you know this. I'm just going to do it for me, right? A little repetition for me. Guys, when price comes down and goes up, we call that a pivot. Everybody comfortable with that term? It's just a pivot. If you're a basketball player, you go from left to right, you've just pivoted. Down to up to down creates a pivot. When this pivot is formed, I'll get a different color for you guys. When this pivot is formed, if the momentum of the market doesn't follow, this negative number is going to print. This cyan divergence line is going to print. And all divergence means, I'm just going to cover this one up. What is divergence? Divergence is a loss of momentum. Easy enough? Not worried about the indicators that make it happen. I'm not worried about what that negative number is. All I know is that I'm losing momentum. So when I lose momentum 3 times, this is a potential termination condition. This is letting me know that the market may turn, it may reverse, and it may do it because they keep losing momentum. The next thing I want you to notice, does everybody remember what a strong trigger look is? Smalls outside of the large are wide. It's universal. Any chart, any time frame, this is a strong trigger look. Look at what happens when that third divergence prints. I've gone from odds favorable to anything can happen. So this lets me know maybe stay out of the trade. The market may reverse. But this is also going to become a very valuable tool as you begin to move into those medium probability trades, because you can identify change on your smaller, faster chart that'll help you manage a trade that maybe has an issue. Dave B., they don't. I mean, I'm sure they mean something, but for us, not a thing. You know, John made it stick in my head. Novaks aren't great at analogies. But he said, Mark, you either have divergence or you don't. It's like pregnant. You're either pregnant or you're not. Nobody's ever been a little bit pregnant or excessively pregnant. It either is or it isn't, right? So divergence, it either is or it isn't. So I'm not worried about the number. What I'm looking at is that line. I know that a number printed. I know that I've lost momentum. 3 times, it can terminate the trend. 3 times with anything can happen triggers, it becomes more powerful. 3 times, and that third pivot is higher than the previous from a low, or lower than the previous from a high. Guys, now I've got a head and shoulders pattern. It just adds more weight to the potential for that market to turn. Give me a Y in the room if you're with me on that. We're going to recognize divergences ultimately. It's the only termination condition we're looking for on a 5-1. So look at this. Odds favorable momentum, right? There's one of those cyan divergence lows. My small triggers have gone through, but my large triggers have not. Guys, we call this a 50-50 look. This will be your first medium probability trade as a new trader. What is a 50-50 look? It means that my large triggers have not broken an area, but my small triggers have broken the area with odds favorable momentum. Let's just give it a name first, guys. 50-50. Has nothing to do with your odds of success. You could call it a straddle look. You could call it a one on each side look. Doesn't matter what you call it. What you need to remember is that this is an area that has not, see if I can spell this morning, has not broken. It has the potential to break with that odds favorable momentum. I'm just going to call it OFM. Save my fingers some typing. So let's go back to termination conditions. No trigger lines through, no clear path. All trigger lines through. We have a clear path. Half of them through, half of them not. It's an area with the potential to break, but it hasn't broken. And guys, I love it when the live market gives us this example. Watch this. Odds favorable, right? We have a key area with the potential to break, but it hasn't yet broken. Look what happens. 1, 2, 3 divergences. The small triggers return to the large, and that market pushes all the way up. Pretty cool, right? There's actually 4 in that same general area, but we're looking at divergences. We're identifying a slowdown. It's going to give you an opportunity to manage. It's also going to give you the potential to stay out of an area that hasn't broken yet, that has the ability to. And we'll talk about these looks, and we'll talk about what they mean to you. This is crude oil, right? The S&P is doing the exact same thing. Why do I keep circling these tails? I keep circling these tails because I have odds favorable momentum and I have no termination conditions. And circling these tails is going to allow me to understand how to find an entry. Guys, when you have rules 1 and 2 met, when you have odds favorable momentum, when you have no termination conditions, we are going to look at the magic of being able to identify the area where the market is likely to continue. And guys, I'm going straight to the manual for this one, because this is the one that's going to keep you getting in at the best of the best spots. When you have rules 1 and 2 met, your 5-1 chart is going to be screaming in the direction of the trend. Your 5-1 chart is going to have strong triggers, one on top of the other. And all you're doing is you're deciding, my rules are met, it's time to take a trade. So let's identify the areas. Fibs, mid-bands, and 1-to-1s. These are all areas where a trade may originate, but we're looking for areas to be inside of these favorable large triggers, inside of these triggers coming up strong. And the rules say that we are going to, in an uptrend, buy a pullback. Everything says up. Let's look at my crowd picture. Remember, 13.2 is the larger chart. This is your large crowd. This is your group of people. Everybody in the large crowd says we're going up. Everybody in the large crowd says we have odds favorable momentum, and everybody in the large crowd says that we have no termination conditions. You guys with me on this so far? That's your 13.2 chart. So what we want on the 5-1 chart is for this small group of people that are bucking the system, fighting the normalcy. We want them to say, nope, despite the momentum, despite the direction, despite the lack of termination conditions, we want the market to go down. And they're going to give it their best shot, guys. When they do that, it creates a reversal bar. Excuse me just 1 second. I'll be right back with you guys. I apologize. That guys, my wife just came in the room. Our son's flying in from Austin today, and his flight got canceled and rearranged, so she was letting me know when to expect him. But let's get you guys figuring out how to enter that trade. Everything says up, right? Odds favorable momentum. Everything says we have a clear path. On this 5-1 chart, you're going to wait for a reversal bar. After all of these up bars, you're waiting for a down bar. You're waiting for that small retracement. And when this reversal bar happens, you're going to identify your window of opportunity. Your window of opportunity is the area where the market is most likely to continue. It will extend from your highest point of support to your lowest point of support that falls within favorable large triggers wide, angled up in the direction of the trend. Your job as a brand new user is to only focus on the entry, okay? Focus on the best of the best spot to put that limit order, and that's right at the top of your window of opportunity, a tick or two above that highest point of support. I would right click on my chart and I would activate a limit order to buy the market at 79.21. And guys, from the second I activate that limit order, I have to accept that I'm not in control. I don't know if the market's going to pull back. I don't know if it's going to fill. I don't know what's going to happen, but what I do know, and I'm going to show the picture too, and of course I closed it out. What I do know without question is that I have the advantage of momentum, I have the advantage of a clear path, and I have the advantage of picking an entry at the area where the market is most likely to continue. Guys, this is my high probability trend trade. This is the trade that if you go back and study it this weekend, typically wins 70 to 80% of the time. My initial entry is here. My stop is below the window of opportunity where the market shouldn't go. And guys, this one has the potential 70 to 80% of the time to get right to that target. This is your best of the best. This is your highest probability trend trade. Every indicator on every chart agrees for the trade. When the market begins to move in the direction of your trade, you could reduce your risk. When you reduce your risk, you've maximized your profit potential because you waited for the pullback. So guys, give me a Y in the room if you're with me, and let's look at it on just 2 charts. When the rules are met on the 13-2, when I have strong triggers, when I have no termination conditions, this is my cue to go to my entry chart, right? I'm not looking at my entry chart and hoping that the 13-2 matches up. I'm letting the broad stroke of the brush, the general temperature of the market, let me know that everything says up and there's nothing in my way. And if I circle this tail on the 13-2 chart, this is how we're going to study today. If I circle that tail and it lines up with an area of support inside of favorable large triggers, or for a short trade, if it lines up with an area of resistance inside of favorable large triggers, well then now I know that I have a high probability trend trade, right? I know that I have my rules met. So let's look at the S&P real quick. Rule number 1 says odds favorable momentum, yes? Is everybody with me on this? Small's above the large are wide, they're angled in the direction of the trend. We're going historical, guys. We're going backwards. Do you see this tail? This tail, good morning, Abdulaziz. This tail is a potential entry on the 5-1. Odds favorable, no termination. That tail is a potential entry on the 5-1. I can scroll back and keep looking for these opportunities and see where they present themselves. Small's below the large are wide. Haven't reached that area yet. I'm going to circle a tail. What am I doing? I'm studying. I'm looking for the absolute highest probability chance. While I'm studying and looking for these tails, I can also say, price reached support here. None of my trigger lines went through. I'm in a holding pattern. I'm not taking the first one. I'm waiting for the retest. As we come back, odds favorable. Everything is up. Smalls are smashing through. I'm going to circle a tail. Guys, give me a Y in the room if you're with me. All we're doing now is looking for rules 1 and 2 to be met on a 13-2. The only thing that we're doing is gauging momentum. This is the middle of the night, but even in the middle of the night, it happens. I'm gauging momentum. I'm scrolling back. I'm looking for opportunities. Looking for odds favorable momentum and one of those reversal bars. Here's a couple of them, and we'll see what this looks like probably. So guys, all we're doing is we're teaching ourselves to recognize when there were opportunities. And now let's go the other direction. Price reaches support. Trigger lines don't break through. I have a termination condition. Price pulls all the way back to resistance. None of my trigger lines go through. It's a termination condition. As we come down, Paul, you can't see what I'm showing. Click on my name in the room, and it should bring my camera up. And then I don't think we're at capacity yet. But if we are at capacity, let me give you the link. Paul, you can also follow along in YouTube. There's a live video playing. It's got about a ½ second delay, but you can watch it, and it's actually a very clear feed. And then you can still post in this room. You can still ask questions, but then you get the best of both worlds there. Or you can log out and log back in and see if that refreshes. Guys, is anyone else having trouble seeing my charts? Everybody else can see them? We're all good? Okay, cool, perfect. Good deal, guys. Happy Friday, Paul. All right, so we're coming back through and we're looking for termination conditions now, right? Look at this. Price reaches support. None of the trigger lines break through. Boom. Not going short. Price reaches resistance. Trigger lines don't break through. Not going long. Guys, we can identify where the market's likely to stop with that simple comparison. 1-to-1s, trigger lines don't break through. Guys, can you do this weekend? Can you open up only a 13-2 chart and just identify termination conditions and just identify? Look at that. It almost looks like we wrote that in there after the fact, but we didn't. That's a middle of the night calculation, happened at midnight. That's where the Fibonacci support ended up, to the tick. No more short trades. Area with the potential to break. The area is broken. Area with the potential to break. And it ended up not breaking, right? Paul, this is the best exercise because it takes all the stress out. You're not watching a live market. All you're doing is practicing your rules. You're practicing recognizing termination conditions in a 100% emotionless environment. You're practicing rule number 2. Look at this. Support. Support is broken. Support acts as resistance. Continuation. Pretty cool, right? Guys, Fibonacci is absolutely amazing. And if you do this drill, you're going to figure it out. Divergence low, just a pivot, right? All we know is that there was a loss of momentum here, but it's not coming from a key area. This is just a pivot. But when price comes back to that pivot, and the large triggers and the small triggers remain above, now I have a termination condition. You guys see the difference? Just a pivot, not from the areas. It's when we retest the divergence low. It's one of those areas that we compare the trigger lines to. Now we have a termination condition. Guys, this termination condition gives us a full reversal. This full reversal gives us odds favorable momentum and gives us a potential opportunity for a long trade. And this is where we're at now. Guys, I'm into the 1-to-1s, right? My trigger lines haven't broken through yet. Well, they just did. Now the area is broken. All right, so the second half of the drill. We've identified momentum. We've identified no termination conditions. Let's see if we have entries, guys, on our circles. Here's our first circle. Did it pull back to an area inside of favorable large triggers? I feel like it's a yes, right? Does everybody see it? This was our first circle. Look at that momentum. Haven't reached the areas. Pulls back to the area of support inside of favorable large triggers. Do we have a potential entry? Guys, if the answer is no, that's okay. Let's talk about it. But I say yes. I say absolutely we do. Here's our second circle. Did price reach an area of support inside of favorable large triggers? So Sam, where does your stop go? Below the window of opportunity? Yeah, you might have gotten stopped out. Or you might have recognized momentum and no termination conditions and strong triggers on the pullback and made the decision to stay in. And that's okay, Sam. Either way, am I worried about getting stopped out for my first 30 days, or am I worried about, and Sam, embrace the simplicity, only finding the entries, guys? That's all we're looking for. We're only looking at the entries. I don't care about management until I can get the correct entry. Because if I can't get the right entry, these trades become difficult to manage. So remember when I said allow it to be simple? Simplicity says focus on the entry. So let's scroll back. And let's look for the next circle. Abdulaziz, 3 divergences in the same location may terminate the trend, right? So if you have 3 divergences in the same general location, are your rules met for a high probability trend trade? And there's only 2 ways, Abdulaziz. Either your rules are met or rules not met. If your rules say 3 divergences in the same location as a termination condition, and your rules say don't trade into a termination condition, do you have a trade? As a brand new user, there's no trade, right? As a brand new user, guys, you're going to hear me say that a lot. As a brand new user, as somebody learning to read indicators, it's not a trade. This right here may not be a trade for a brand new user, but can we still learn to nail the entry, to see it, to focus on the process, to understand? that this is a pattern that repeats itself for entry. Conditions aren't met. And Abdulaziz, as you grow with the software, everybody, as you grow with the software, you're going to say to yourself, well, is my last divergence lower or higher? Have the small triggers work their way inside of the large triggers? Do I still have enough advantages? Based on the look of my 13.2, based on the chart that leads the way, is there anything about the look on this 13.2 chart? Think of the advantages it gives you. Momentum and a clear path. Is there anything about the 13.2? Is there anything about the color or direction of the triggers, about the smalls above? Is there anything that suggests that this may not be a trade worth holding on to? You may not know the answer in the beginning, because in the beginning you're focused on conservative highest probability trend trades. As you grow with the software, guys, I can tell you, as someone with experience with the software, all day long with that look on the 13.2, wild horses couldn't pull me out of that trade. But if you're brand new, you don't have the repetitions to read that in the moment. So we're going to continue to focus on the best of the best entries, right? There's a circle at 4:16 in the morning. I'm going to go back to 4:16 in the morning. It's coming off of a termination condition, so probably not our trade, but it does pull right back to that resistance inside of favorable large triggers. Let's find a clear path. 3:13 in the morning. Once again, not the best look, right? Sometimes it's not your trade. You have to be okay with that. And then the flip side of that, let's do it in the moment. Smalls below the large, larger wide, angled down. I can identify my area of resistance inside of favorable large triggers. Guys, has 40, 77, 75, has it broken? Is it a termination condition, or is it an area with the potential to break? Three choices. One says no trade, one says trade away, and one says that it has the potential to break. So let's make sure that everything is solid. Let's make sure that there's enough advantages in place to take a trade. Exactly, Paul. It has the potential to break, but it hasn't broken yet. See that odds favorable momentum? That odds favorable momentum increases the chances that it may. No divergence on the 5-1 increases the chances that it may. There's your window of opportunity, right? Inside of favorable large triggers. Do you guys see how we're watching this real time? Smalls below the large keep coming down. The momentum hasn't wavered. Everything says down. So on my 5-1, I'm starting to gauge, where's that market likely to continue in the event of a pullback? Does everybody see it? This is the bottom of my large triggers. This is the top of my large triggers. How many areas of resistance are inside? From my highest point to my lowest point, I've got a mid band, I've got 1-to-1s, and I've got Fibonacci resistance coming into an area that has the potential to break. It may or may not pull back, guys. We have absolutely no idea, but I'm going to leave my circles up. We're going to go through. We've talked about entries. We've talked about momentum. Termination condition, directly into a termination condition. 90% of what we do is going to be waiting. It always aggravates people. They're like, what's going to happen? What's going to happen? It doesn't matter. Because the reality is, it is what it is, right? I'm not in control. That 78 resistance ultimately became my lowest point of resistance inside of favorable large triggers. It came right up to it. But when the pullback started, this is my window. And now I have a loss of momentum, don't I? I have what's called a 50-50 trade. I have an area with the potential to break, but now my slower chart is showing me a slowdown. Some people will still take this trade. Some people will choose not to take this trade. Guys, it all depends on what your plan says. So let's talk about a conservative plan real quick. The only thing that we've talked about right now is entries, right? Why have I only talked about entries? Because that's all that matters in the beginning, guys. The only thing that I need you to focus on right now is being able to get into the market, picking that best of the best spot, allowing yourself to be new. So what I've just put in the room for you is an example plan. It's an example of how to write a trading plan for the brand new user, for the first 30 days, for the person that's learning to read their indicators. Show of hands. Who's in the first 30 days here with Nexgen? Who showed up? And here we go, right? First 30 days. Cool. Congratulations. You are allowed to be new. You're allowed to keep it simple, and you're allowed to not really focus on anything that doesn't matter. Look at all these first timers. Guys, welcome to the class. Welcome to Nexgen. This is your classroom. I want to see all of your hands raised. I want to see just a myriad of questions from you new people. Guys, this is your first task as a brand new user, is to define your entry point. Not to win a lot of money, not to get caught up in a lot of things that don't matter, but to only identify the area where the market is likely to continue. And I want you to personalize it. I want you to say my trade is the high probability trend trade. Why? Because this is a trade that typically wins 70 to 80% of the time when I take it. This is my high probability trend trade, guys, and I've even got a checklist for it. I just put it in the room for you. There you go. In order to enter this trade, I must have the conditions of this checklist met. You notice how I'm giving myself absolutes here? There's no gray area. I must have the conditions met. Is the market coming from a good top or bottom? Is the market coming from a termination condition? I want to see a yes, but if I don't, it's okay. It increases the likelihood of success, but it's not mandatory. This may be the only thing on the checklist that I ever want to see you guys fudging in the beginning. Did I have odds favorable momentum? Did I have no terminations conditions? Did I have an area inside of favorable large triggers? Guys, if the conditions of this checklist are met, what have you just identified? Your entry, correct? The only thing this checklist is doing is it's getting you into the market. Is everybody with me on that? It's creating this confidence in you through repetition of being able to identify the conditions that get you into the market. That's all we're doing. Notice that it doesn't say make $1 million. It doesn't say worry about divergences. It doesn't say look at all the other lines on the chart and wonder what they mean. We're just identifying the entry. Why? Because when you start nailing entries, management becomes easy, but not until that entry is where it needs to be, guys. So the next thing you're going to do, and I brought this up, new people, do this with me. Now I know there's so many of you in the room. Pull out your capture software. If you have charts running, you can take a picture of your charts. If you don't, take a picture of the classroom. That's cool. I'm going to click this giant red button. If I hover over one chart, it's going to give me one chart. So I want you to left click in the upper left-hand corner and drag it all the way down to the bottom right. Okay? We want two charts. We want our chart that sets the tone, that gives us momentum, that gives us no termination conditions, and we want the chart where a potential entry comes from. So once I release, I'm going to click capture an image. And guys, this is your image preview. This is how you and I have a conversation. And what are we going to do? We're going to write our rules on the chart. I'm going to use arrows to point things out. I'm going to use shapes. But the most important tool that you have, guys, for this classroom is this call out box. Is I want you to tell me your rules. I want you to tell me what you see, why you're doing what you're doing. It doesn't matter if it's correct or not. It doesn't matter if it fits the rules or not. I want to know where your brain's at, because what's going to happen is you and I are going to have this conversation so many times that I'm going to begin to recognize patterns. Maybe they are you break rule 1 all the time. Maybe they are you like to trade in determination conditions. But I'll begin to recognize patterns in you, and then we'll have a conversation every day to help get you to where you want to be. Show me the odds favorable momentum. Show me the no termination conditions. Talk about where you got in. And then, guys, this is kind of a big deal. Tell me if you were confident, if you were nervous, if you had a management question. And what you're going to do is you're going to take this picture, guys. Every time you take this picture, you're going to click the upload button. From Capture Software, the upload button is going to give you the screencast address right here. Once I click copy, I'm going to post it in the room, and I'm going to sit patiently and wait for my turn. And guys, I promise I'll catch every question. I'll look at every chart. I'll give you feedback on everything that you're doing. But I usually try to get through what I'm saying, and then I come back and I look at charts starting in the second hour. The other thing you're going to do is once you have that address, does everybody have their spreadsheet opened up? That Nexgen 90-day worksheet? Right from the tutorial section? If you're brand new, guys, this is in your Nexgen Study Picks folder. So Paul, hit your search function. Maybe type in Nexgen 90. Or maybe just 90. There it goes. And it comes right up. If you can't find it, here's a link. We can download it real quick. So this is the second half of putting yourself on the path to becoming a confident trader ASAP. The first one is posting in the room, guys, as much as you possibly can. Everything that you see, every trade that you take, every question that you have comes into this room so that I can give you the best feedback I know how to give you and get all of your questions answered. Every trade that you take on Simulator, win or lose, you're going to take a picture of, and you're going to post it into this first page. And what's that going to do for you? It's going to reinforce your best of the best looks. It's going to reinforce that you're following rules. It may show you where you tend to break rules. I like to trade in determination conditions. I have a problem with that. I recognize that pattern because I kept filling up this spreadsheet with links that say traded into a termination condition and lost. Remember, we had that link from Capture Software. That was our trade. I'm going to put it into the room. Awesome. I'm going to create a hyperlink that says broke rules, lost trade, so that I can come back and go, man, what rule did I break? I want to make sure I don't break it again next time. Guys, I can tell you that the people that are on the path to success have a trade journal. They go through and they see this each and every day. This is an example of a Nexgen spreadsheet that one of our users was nice enough to let me borrow to show you guys. It's not mine to give away, but you can take a look at it. And all this does is it just shows you how thorough she is. Every time she takes a trade, she catalogs it, where she took it, the date she took it, how she felt taking it, and any notes that she had. If you get in the habit of creating that trade journal in the beginning, you're going to get to where you want to be faster. As you take that high probability trend trade and you nail your entries, guys, Nexgen Trader favorite looks. That's the second tab. Your personal favorite looks. Each time your rules are met, put it in this green section so that you can come back and reinforce those good habits. When we do finally work on management, you'll begin to fill this one up, chart reading things, termination conditions. And then guys, you have the advantage right now That spreadsheet that you have, or if you've downloaded a new one, you have 70 pictures of high probability trend trades with the rules being met, 70 pictures that you can come through and compare what you're doing to make sure that you're following rules, that the looks are right, that you can go through and reinforce. Guys, if you haven't done this weekend, I want you to click on every one of these pictures and I want you to look at the similarities. I want you to look at the advantages. I want you to look at the entries. And I want you to start burning that image in your head. I steal your pictures all the time and I'm growing that list. So taking pictures, put them in the room, put them in the spreadsheet, and then put a couple of those great rules-based pictures right into your example plan. This is what it looks like when my rules are met. This is the look that I want to have each and every time I take a trade. So guys, quarter sheet of paper. Your plan to define an entry. Give me a Y in the room if you're with me. Your homework this weekend is to steal this plan and write your name on it. Paul T's trade is the high probability trend trade. Zeba's trade is the high probability trend trade. Sam User's trade is the high probability trend trade. Tricky 7800's trade. SH West trade. D411, 4011. Who else is brand new in here, guys? I love all these new faces. Go through this weekend and just write it out. It'll take you 3 minutes. This is your highest probability trend trade entry, guys. And then as you work into a medium probability trade, entry conditions must be met on a 50-50 trade. The newest user will say no divergence on the 5-1 because you don't have the skill set yet to gauge whether or not there's enough advantages with that divergence to take the trade. Small triggers should be outside of the large on the 5-1. And then once again, you're taking a picture of that perfect entry. This is your plan. New users for the high probability trend trade and then for your first medium probability trend trade. What does it focus on? Say it to me in the room real quick. The only thing that is focusing on is what, guys? Entries, right? I need you to believe it. You're only focusing on the best of the best entry. And then management is going to be the second thing that you work on. Here's the most mechanical, emotionless, opinion-free approach to management that I've ever seen in my life. Trade 2 contracts. Let the initial stop is put into the ATM strategy at 12 ticks. It gives you room to adjust it below or above the window of opportunity. There's one mechanical movement that's 100% pragmatic, no opinions. Move 2 ticks above or below the reversal bar in the direction of the trade. Once again, emotionless, mechanical. Take profits at 100 and 200, and when 100 is reached, go to break even. Get that dopamine kick of winning these trades, right? $100 feels good when you do it 10 times a day. So guys, focus on entries, focus on management, and embrace the path. I can't tell you how many people fight the path because we're all so darn smart. Step-by-step path to becoming a confident trader ASAP, guys. Post your trades in class, track them in a spreadsheet. It's that simple. Learn the rules when it's okay to trade, simulate daily. And guys, make sure that you're practicing the right trades. Make sure that you are embracing following rules, not taking crazy counter trend trades just because it's simulator. Don't practice the wrong trades because you're setting yourself up for long-term failure. I can't tell you how many times we see simulator millionaires only to blow out accounts once they go live because they haven't established that they can always take the correct trades. Simplify your plan. Use market replay. The easiest way to get a year's worth of experience in 6 months is to use market replay. To go back and retrade the market as though it were live, fixing your mistakes, taking trades you missed, skipping trades you shouldn't have taken. Take pictures of every trade that fits the rules. Take pictures of every trade that doesn't fit the rules and write why it doesn't, and repeat this process every day until you always take the correct trades. Not until you win every trade, until you always take the correct trades. And then once you guarantee yourself you can win, that's when you trade live money. Guys, if you're always taking the correct trades, and the correct trades have been proven to win more than they lose, haven't you guaranteed yourself that you can win if you don't deviate from the plan? See how that works? Kind of tricky. We have high impact news coming in right now. Let's see what happens with it. That consumer sentiment. Termination to termination. Weak triggers at a termination. Guys, they're winding up for something, aren't they? There's that news. People ask, well, Mark, can I trade into news? You can do whatever you want. I'm pretty quick with the software. I see a termination condition, no triggers through, 3 divergences in the same general location. I see support to potentially hold, and that emotional response from news just pushed through everything. Pretty cool, right? Rules give us advantages, and advantages keep us on the right side of things. Guys, I'm going to take just a minute. I'm going to reload my water. And then when I come back, we're going to start looking at your charts. We're going to start talking about what you see. We're going to start talking about your trades, your rules. If you have a question, I want you to post it in the room. If you take a picture of a chart, I want you to post it in the room. And guys, if you're sitting there and you're thinking, you know what? I don't know enough to post in class. You know everything you need to know. You need to take a picture. But Mark, I don't know the rules well enough. That's okay. Mark, I don't know what I'm looking at. That's okay. I want you to do this. I want you to just take a picture, whatever's on your chart. Tell me what you see. And use these arrows. And maybe here, I see strong triggers, right? Because I can identify strong triggers. I don't have any idea what to do with them, but I can see them. And then here, well, I remember this because I was paying attention. That's a termination condition right here. Do you see it? What am I doing? I'm not taking a trade, but I'm starting to talk myself through the process of reading my indicators. And then I want you to take it, and I want you to either copy it or upload it. And then once you do, put it in the room. Guys, I want you to be brave. It's Friday. I want you to take a picture of a chart and post it in the room. If you don't have charts running, I want you to take a picture of your desktop, post it in the room. I want you to take a picture of a cute kitten that you found on the internet, post it in the room. But I want you, when I come back from this little break, I want this room flooded with people showing me that they're capable of taking a picture and posting it in the room, because that path to being a confident trader ASAP said very clearly, post in the room. Guys, I'll be back in just a second. I was just typing. I was just going through the same drill that I asked you guys to do. I didn't take a trade. All I did, right? All I did was look at my charts, and I wasn't sure about something. So I wrote a question on the chart and posted in the room so that I could get feedback to make sure that I'm reading my indicators the way I need to be reading them. Pretty simple, right? Guys, that's the process. So I'm going to scroll up to the top of the room and I'm going to start going through some of the pictures that you guys have posted. I want you to understand that as I go back and forth, I'm just going to show you right here. As I go back and forth, I've got to go all the way up to the top, then all the way back to the bottom. So if I don't see a question, I will eventually. And guys, oddly enough, I got us started this morning, but we're going to go through what I did. I watched the market, pre-market. And this is me annotating my charts. I had a strong bottom. It was one tick from support. I get a full reversal. I have odds favorable momentum. Rule number one is met. So guys, give me a Y in the room. Does everybody see how rule number one was met on this chart? Guys, this is crude oil this morning. Rule number two, I'm identifying that it's a 50-50, that my large triggers have not broken through the area, but my small triggers have smashed through with unbelievable momentum. So I'm identifying my one small issue. Do you see it? So guys, as a brand new user, if you're using that example plan, divergence prints. And a lot of you say, okay, this isn't my trade because divergence prints. And some people will take it and some people won't. I go through the process. I'm coming from Fibonacci support. I've got a full reversal. I've got odds favorable. I've got everything that says up. I've also got strong triggers. They're well above the area that I'm concerned about breaking. And my highest point of support and my window of opportunity, guys, do you see it? The teal are my trigger lines. The orange is my window. My highest point of support is at that area that I'm wanting to break, that I'm anticipating breaking with that momentum. So I made the decision based on advantages, based on one issue, that I was willing to take this trade. You may not. You'll get to the point where you probably do. And then I take pictures during the trade as well, because I like to reassess, and when I take pictures, it helps me out. The 13.2 gave me the reasons to enter, right? So I'm going to trust the 13.2. Look at that entry. I didn't move my stop yet because I didn't feel like I needed to. But guys, that's 3 ticks of risk on this trade. And I've identified where the market is likely to go based on momentum and Fibonacci. Everybody with me on that? And then it hit my target and it didn't fill it. And I said, you know what? I'll give up 2 ticks because that's exactly where the market said that it was likely to go. I'm going to be a tick or two below, just like I'm a tick or two above. Guys, that was one contract. That was $260 over the course of about 3 minutes. Does everybody see the process there? See what we did? Strong triggers. Everything says up, coming from a good bottom. Tiny window of opportunity. Look at that entry, guys. Remember when we said that great entries make trades manageable? It's almost like I knew where that market had the best chance of continuation. Pretty cool, right? All right, so there's our first one. I'm going to come through. Let's see what you guys did now. I showed you what I can do. I studied. Gary, just giving us some chart reading on the exact same trade, right? He identifies it as a 50-50. His pulls right back to the areas. He's got his targets identified. Same thing, just no entries on the chart. Coming through, Gary again. He says this one is from yesterday. Gary's got a strong bottom. A termination condition creates a full reversal, and it gives odds favorable momentum. And we have 1, 2, 3 areas with the potential to break, but have not broken. There's a slowdown on the 5-1, so he waited on another chart for confirmation. Takes profits. 3 divergences in the same location tell him to get the hell out of that trade. Nice job, Gary. Great reads, great management. Using that small chart termination condition to help you identify when a trade wasn't working anymore. Medium probability. 50-50, no divergence. All right, Gary, this one. Are you with me, Gary? So let's look at this one real quick. And guys, this is why annotating your charts is so important. 50-50 trade, no divergence printed. Textbook termination condition. Price reaches a cyan divergence low. Absolutely none of the trigger lines break through. Guys, I need a little more confirmation that this area has the potential to break. Gary, you're looking for divergence on your 5-1 on a 50-50 trade. Divergence won't print on a large chart until the 3rd bar. So you've got a termination condition, 50-50 above, and you've got divergence on the small chart, giving away a lot of advantages here. Just something to think about there. And guys, this is why using that annotation, having that conversation is so important, because sometimes you're going to be like, yes, and I'm going to go, hey, let's talk about this one here. And you'll be like, dag nabbit, I knew that, and I didn't recognize it in the moment. And that's okay. Sometimes you won't recognize it in the moment. But the more moments that you have, the quicker you're going to recognize it. Safia, let's see what you did today. Safia, smalls above the large are wide, they're angled in the direction of the trend. And you did a great job taking the pullback directly to the midband. You keep your stop where the market shouldn't go. You take quick profits on the first one. Nice exit on the second one. Safia, great job. Way to keep it simple. And now, perfect entry, right? So now we talk about the management side as you grow with the software. With this much momentum, Safia, is there any reason to believe that you weren't going to get to that red fib? If all you look at is your 13-2 chart, it says we're going, doesn't it? No, that's okay. Chicken out in the beginning, because all we're worried about is entries, and you nailed it. Great work, Safia. Guys, that's how you turn feeling like a step back happened into a step forward. Taking a big breath, regrouping, focusing on the simplicity, and nailing those entries, because everything works out when you nail the entries. Paul, not so much 50-50. Divergence prints. You get in, quick exit, break even. Paul, you're kind of walking the line there. And guys, this is very much the damn it, I didn't catch this, pardon my French. I'm going to eke those trigger lines right through and hope for the best. And then divergence from the area. Stranded buyers, no triggers through, triggers barely through. I love your management on this. But yeah, that's a tight trade. This kind of helps you identify that this might be just a shade of overrun. And Paul, look at where you're coming from. They never made it to that key area down here. Great trade, great management. And guys, this really illustrates once again, when you learn how to take the absolute best of the best entries, you can manage a trade. Paul made money on this trade. Paul made money on that trade because of his ability to take the perfect entry. That's the lesson there. I like it. Nice job, Paul. And then Paul says, you notice this happens a lot. It doesn't seem to matter because you can use both charts, but is there a setting you should change? Fib on 7, not on 8. Fib, so Paul, this fat fib is coming from your 21 on NinjaTrader 7. You don't have it on your Apex, on your NinjaTrader 8, because your tick data is off, right? Because you don't have tick data because it's not running synthetics. So the only ones you're going to see are the ones that are native to the 7. You're reading your NinjaTrader 7, Paul, and you're executing on the 8. Absolutely, respect them. If they're on 7, that's what you're used to. Great question. And guys, what Paul's doing is Paul's using NinjaTrader 7 for analysis and NinjaTrader 8 for execution because he's letting someone else fund his trading. I like it. Gary, 50-50. There's your divergence. Loss of momentum. Didn't wait for the market flow signal per your checklist. Divergence prints, area with the potential to break. Then we get that higher divergence with the small triggers coming up, and it does exactly what we anticipate it doing. Nice job catching quick profits, getting out, giving away the advantage of momentum on a 50-50, and then executing perfectly when you do. Elvis says he's nailing entries. Let's see what you did, Elvis. Let's see if I can find your entry. This was your entry here? Or that was your entry there? I don't see an entry. For a short or for a long, Elvis? Elvis, I don't see the next picture. You don't want to just tell me if it was a short or a long? Let me scroll all the way back up here. Elvis, there is no next picture in that series. Yes, short or long? So all triggers up go short because there's a red line. And then everything finally decides to come down, go long because of a blue line. Got it. Anything can happen triggers. Mid-band. Gary saying you're not quite there. Termination, full reversal, trigger lines roll. Gary, this is one that you'll probably add into your plan eventually. This is just letting an area likely to stop the market, reverse it, and then getting every chart to agree at one nice little consolidated area. Not necessarily a high probability because of the triggers, that divergence, but ultimately, Gary, I guarantee that one's going to work its way into your plan as you grow with the software even more. Ron C, little momentum, everything says go, clear the areas, get in, get out, cash your paycheck. I like it. Elvis, everything says up, but that 13-2 chart says price reaches resistance, absolutely no trigger lines through it. Going long becomes a little bit of a financial suicide. Going short, you're talking about room. You're talking about 12 ticks. 12 ticks with triggers that don't agree. 12 ticks with termination conditions. And Elvis, it's not my job to tell you your plan. But with the look on the 21, the only direction I would even consider going, because of strong triggers, would be up. And because I've got a killer termination condition with everything below it and the smalls below, I'm letting an area break. Totally up to you. You do with your money whatever it is that you'd like to do. But I'm going to point out that trading directly into termination conditions is rarely advantageous. There's a reason that that's rule number 2 and that we spend so much time focusing on those in the beginning, is because that advantage of a clear path helps an awful lot. Terrence posted a picture. Would have been a good trade, but close to the UK Open. All right. Are you trading in the UK, Terrence? Mostly? Okay, cool. Then good recognition that it may take away your advantage. I don't think I could even tell you when the UK market's open. All right, Sophia once again. Let's see what you got. 1 a.m.? Okay. I try to be asleep. Potential entries that you missed. So you're going back and doing that circle, right, Sophia? First circle. I'm not sure that any of your trigger lines broke through support yet, right? Do you see it? Second circle. I'm not sure any of your trigger lines had made it through the 1-to-1s yet. Third circle. That may be the one, right? And look at that. That third circle was the one that gave us the push down when the trigger lines broke through. How cool is that? Not yet. Don't do it. All right, giddy up. And there it goes. Nice job, Sophia. Great job using a very simple trick to go back and look to see when those advantages were present. It's a very powerful tool, guys. All right, Gary coming through. And guys, remember, if you have a question about somebody's chart, feel free to ask. Gary, everything says up and you go short. Everything says up. Everything says up. You're saying it's a snapback trade, Gary. And guys, I always default back to, it's not my job to tell you what to do, right? It's not my job to tell you how to trade, what to look for. Not my job to tell you what your rules are. But what I can do with my job is I can tell you that, Gary, this is kind of misusing the snapback. What is a snapback? What's Gary talking about? Well, what Gary's talking about is that when price pulls away from those trigger lines fast and hard, and then that mid band or the area gets hit, price tends to pull back to those large triggers, right? So this is a look, and let me just pull a picture right from my spreadsheet. When price pulls all the way up to this mid band, the large triggers don't follow, and price typically snaps back and closes the gap to the large triggers. Gary, is that what you were talking about on the snapback? We'll look at it one more time. Price pulls all the way down. Large triggers remain a full bar away. Price tends to close that gap. Is that what we were looking at, Gary? I want to make sure. The short, right? All right, cool. So I'll just go ahead and talk and let you guys know. That gap theory relies on these large triggers being down here below that reversal bar. I know, it's the second trade on the chart. The short. Yes, Gary? So the large triggers aren't a full bar away, which means that with that much momentum, this market may just continue in the direction of the trade. Awesome, no worries. So just in practice, these large triggers below the reversal bar creates a little more conviction to closing that gap. And if we go back, let's look at it, guys, because this is a pretty good theory. Let's see if we can find one. Price reaches the one-to-ones, the large triggers remain a full bar away, and price pulls right back to those large triggers. Here, price reaches a mid-band, the large triggers aren't a full bar away. It continues in the direction. Price reaches support, triggers are a full bar away. It closes the gap. Everything we do is patterns, right? Everything we do revolves around identifying these things that tend to repeat themselves over and over in the market. Price reaches resistance. Large triggers are a full bar away and it closes the gap. Here, price reaches the mid band, price reaches that support, but notice how the large triggers are below the reversal bar market, or below the reversal bar marker. Not the same theory. Good stuff. Great stuff, Gary. That's such a good picture. And I think that there's a good lesson and a nice reminder on that gap theory in there. And that's the same one. And then Elvis, potential area recognized long ago from previous picture, posted way above in the chat. Using that momentum, letting the area break, Elvis, taking the pullback. Beautiful. Beautiful, beautiful. Elvis, big difference, right? Between hoping it breaks and letting it break. Great job on that, man. Great patience. I just got goosebumps. Nice job, Elvis. That's the patience piece, guys. The difference between trading what you think will happen and trading what is happening. Nice job. Elvis, you get a virtual high five on that one, because I know that's a big step in the right direction. That patience piece is one of the hardest parts of trading. George T, everything says up. No divergence on the pullback, so you take it. Profits, profits. Guys, as you grow with the software, your plan may change. George T used to give me heartburn trading in determination conditions because I didn't understand what he was doing. I didn't know his rules the way I needed to. Now, George T can use no divergence on a smaller chart and strong triggers and nail his entry and make this work. New users, this isn't your trade. George T spent a lot of time and effort getting good at that one. Jonathan, everything says up. So you take a pullback and go up. Second divergence prints pushes you right back. And you exit just above the mid-band. Jonathan, what happened after this trade? Just curious. That's crude oil at 907. And let me show you guys why I ask. And we can scroll back and look at it. I've got strong triggers and I've got no termination conditions on my 13.2. I've got an area of support, beautiful entry. But as this market pulls back, isn't this still an area of support inside of favorable large triggers? Aren't my small triggers still outside? I'd be curious if that market continued up from that point. Is that this morning, Jonathan? You might be in a trade. At 9:09 on crude oil. I'm going to go take a look real quick, guys. We may be in a different time zone. No worries. So Jonathan, if you come back, I'd love to know where that market went. Does everyone see that though? And this is just a management thing. If the rules are met on the 13.2 and you still have strong triggers and you still have areas for entry, a lot of new users will take a stop right where they should be looking to re-enter the market. Does that make sense? I've done it, and I typically don't notice it in the moment, and it took a while to train myself to get there. It's a great trade, Jonathan. Sam, your replay trade didn't work. 50-50, right? Great recognition. 10:07, thanks, Alex. Oh, and it did end up going down. Jonathan, thank you for that. Yep, pulled all the way back, huh? Gave maybe a little shot, and then that third divergence prints and pushes it down. Right on. I like it. Another reason why it's best to take the first shot, right? Thanks for sharing that, Jonathan. You can tell that it's a rules-based exit. Second divergence, it's lower, small triggers down. You're not willing to hope. And then it waffles and ends up dropping all the way down to the mid-band. Good stuff. All right, Sam, user, are you with me? Let's talk about your trade. So Sam, is rule number 1 met? Strong triggers. Ooh, that's some big font, isn't it? Sam, you without a doubt have strong triggers. And then you've identified that it's a 50-50, right? Smalls are above, but the large are below. Great job, Sam. Great chart reading. Termination creates a full reversal, gives us odds favorable momentum. That you have a 50-50, you have an area with the potential to break, but it hasn't yet broken. And let's look at it. That may have been your one fly in the ointment, Sam. And this is one of the reasons why we talk about new users, keeping it super conservative. That divergence says that we're losing momentum a little bit on an area with the potential to break. You enter below the areas. So your entry point, remember the top of that window. Right there at those 1-to-1s, right there at that mid band. And Sam, this one just didn't work. I think that you identified it. You had advantages. You had strong triggers. You're in a little bit low, but your stop is below that window of opportunity as well. Sam, nice job on this one, guys. And just because that doesn't say that you're winning, this is a great read. But you put even though it's a 50-50. 50-50 is a medium probability just on its own, isn't it, Sam? Potential to break but hasn't broken. There's one small issue that exists. But now I have divergence on a 50-50 as well. So you put even though it was a 50-50 as though that 50-50 should have been a guaranteed win. It wasn't. It was a medium probability trade. and it was a medium probability trade with a little bit of a problem associated with it. And that's okay, because sometimes these are great trades to take. The only way to find out is to take them all, get the feedback, put it in the old mental locker, save it in the spreadsheet, look at it tomorrow. Sam, great job. It was a great read. That divergence might have been the only thing for a new user to keep you out of it. Earl, you tried the short. You held on to it, I'm going to say way too long. Way too long. And then it reverses. You get odds favorable. You take the pullback. Can I show you something here? And guys, I love when you write your rules on the chart. And we're not even going to look at the previous. We're only going to look at the long because it's a great long. You're welcome, Sam. Why do I write rules on the chart? Because, guys, I'm brand new. And because I'm brand new, I don't have these committed to memory, nor do I have the looks associated with the words committed to memory. So rule 3 says use a limit order to buy a pullback. I'm going to go caps lock for a second. Add an area inside of favorable large triggers, right? Earl, are you with me? When I talk about rule number 3 on this picture, I love this picture for a couple reasons. The first one is that you're using an area, and that's important, right? Trading from an area is a good thing. This 47.7750 compared to the areas inside of favorable large triggers, 40.76, right? That is 1.5 points in the S&P, which means that there was an extra 1.5 risk. But I think more importantly, and this is a beautiful trade, you took 5 points on that one, right? It could have been 6.5. It's not a bad trade. It's great profits. You absolutely nailed it. The read was perfect. I think you did everything right. And there's not a thing really that I can pick apart other than saying that rule number 3 gets you a little more money and a little less risk. Great job. It's a beautiful trade. Just a little early on the entry. And it was probably because that one didn't make it. And you thought to yourself, man, this one's going without me. I'm going to get in at the mid-band. And some people will do that, guys. Some people will say, I'll go ahead and get in at the mid-band. And it's obvious that you knew exactly where your stop should go. Some people will even say, I'll get in at the mid-band just in case, and I'll put my second contract on at the very, very best spot. Something to think about. Great trade, Earl. Great read. Everything starts with chart reading. Strong triggers, clear path, no divergence, strong triggers, window of opportunity. It's just one after the other. Boom, boom, boom. Go, go, go. Elvis, I think you asked a question earlier, correct me if I'm wrong, about being able to identify the tail before, like as it's happening. Did I see that question and not address it? I want to make sure that I get every question. And I know that it was when we were studying the entries. I'm scrolling and not finding. If you could help me. Okay. So Elvis, I wanted to answer that one. And I'm just going to do it with a picture. I don't know where this tail is going to happen looking at a 13.2 chart, right? I can have an idea because I've read charts long enough that I have an idea. But if I use that 5-1 with it and recognizing if I circle the tail after the fact, it comes right to that area of support. So in the moment, when price is trading all the way up here, and I'm trying to figure out where that tail's most likely to happen so that I can enter the market, that's when we use that 5-1, when we refine it a little bit. And if you wait for the tail to form to take the trade, then the trade is long gone. So if you try to trade the actual tail, you're probably going to miss a lot of them, or you're going to get run over because you're going to guess that it's all the way up here at the mid-band, and that mid-band's way up here, not inside of favorable large triggers. Does that make sense? And especially for you new people, absolutely, Elvis. Always trading from areas, and more importantly, it's the areas inside of favorable large triggers. And why is that? Same reason we have the gap theory. As price accelerates away from these trigger lines, whether it's the large chart or the small chart, it tends to pull back. And when it pulls back, and there's this wall of support for it to bounce off of, and they're inside of those trigger lines up and strong, that's your best chance of continuation, which coincides with where this tail ends up ultimately forming. I don't know. You'd have to show me a picture of it. I've been teaching class. I haven't been watching the market so much. So I'm not sure if there was one. I'm not as talented as John. I don't have 17 screens and watching everything. I can't pull that off. Trying to put in a good top with a question mark. Paul, you know I like this picture. Why? Let me snap that picture. Absolutely. Is it trying to put in a good bottom, or is it trying to put in a good top? I don't know. Hey guys, this is a great it ended up being a good top, and the odds were in favor of it being a good top, without a doubt. You win. I like it. But do you see how Paul can say, this looks like an area that's likely to stop the market, right? He's saying it looks like it's going to be a good top. It might give me a reversal. The difference between thinking what's going to happen, and what was that? That was the S&P? Thinking what's going to happen and what has happened. When that full reversal happens, then the potential for a good top becomes an actual good top. Does that make sense? And we had a great picture along those lines the other day, because guys, this is just a fight. All you're doing is you're watching the fights between buyers and sellers. Let me see if I can find that picture. I think we put it in the other day. I take a lot of pictures, guys. I think resistance will hold as price comes into it, as my trigger lines are still up, as there's momentum. Well, I thought it was going to hold and I got run over. I thought it was going to hold again and it stopped me out a second time. I thought it was going to hold again and it stopped me out again. So I thought it was going to hold again and it stops me out again. Or I think resistance will hold. All of my triggers have turned. Now resistance is held. This price is this price. Do you guys see it? Do you see the difference between I think it's going to be a good top and it is a good top? I think resistance may hold. Resistance has held. And Paul didn't take a trade. Paul didn't jump in here. What Paul did is Paul recognized a termination condition that's been hit twice. Paul recognized trigger lines that were trying to turn but hadn't turned. So he's saying if, then. If this happens, then I'll look short. If this breaks because of this, then I'll look long. You guys don't know it, but Paul puts these little snippets in the room for you that are typically great chart reading, so that you guys can learn a little something. Paul T, first trade yesterday. Let's see what you did. Paul, are you in here? Yeah. So Paul, let me see if I get this right. Not you, Paul, my other new favorite Paul. Paul T. So Paul T, what you're saying is that when you have odds favorable momentum, when you have a clear path, all you're going to do is wait for a pullback to support and make money? That's it, Paul? This is absolutely beautiful. It sounds good, doesn't it? So Paul, there's only one other thing that I want you to do, and this is going to be as much for you as it is for me. I want you to write your rules on your chart every time you take a trade like this. I want you to start reinforcing that these advantages yield results, because I think it's important to do that. The more you write it on a chart, the more it sinks in for longevity. The more you talk about just how beautiful this is, the more you believe it, the easier it becomes to take it. And the easier it becomes to take it when this one loses every now and then. And it will lose every now and then. Does that make sense? Paul, that was absolutely beautiful. Welcome to Nexgen. Let's see where we're at. Jonathan, was this the one that you just showed me what happened? Yeah, okay. And then Paul, you missed the commentary on this post yesterday. Man, I don't know, Paul. I think that if you rewind and go to YouTube and find the video and the spot, you'll probably be able to get the commentary. Or let's talk about it. I love it. Small's closer to the large. All right, small above, right? Large above, 50-50. Looks good. Strong triggers, tiny little window of opportunity. And I love that you did this. Really tight overlapped window. This is like, it's either going from here or it's not, right? You take it beautifully right up to the trouble spot. Yeah, I know, Paul. I'm just messing with you. I love this trade. Nice and strong. Great momentum. Everything up. Room to that 1-to-1. And it's also coming from higher divergences. I mean, there's so much right with this trade. And notice how this area, this blue Fibonacci support is this blue Fibonacci support, and your trigger lines are above it. Great look. And then we come over here and we get that 50-50. And we've got 1, 2, 3, 4 areas that aren't quite broken. And you've got split triggers, right? Which means that your window of opportunity goes from 32.25 all the way up to 34.5. Guys, Paul's giving you a great picture here. Big difference on the entry looks, isn't it? Paul, this is great analysis. Then it's okay that you took that second trade. But what's going to happen, guys, is initially you're going to focus on entries, right? And you're going to get really good at entries, and you're not going to see all the noise around because all you're working on is entries. But then you're going to start dissecting those entries. You're going to start saying, well, my window is huge. That's a lot of risk for a 50-50 trade with divergence. You're going to say, these triggers are split. Is it going to hit the bottom or is it going to hit the top? And you'll really start kind of calculating, going through, talking about it. And then, Paul, for me, One divergence, higher divergence, third higher divergence. This is a market that's definitely trying to push up from support without a doubt. 50-50s back to the downside might not be as advantageous. And that's kind of an overall look. So not perfect with divergence, not so much. Tiny little window, I'll take a shot with that divergence because I've got the ability to read charts just like you do. Brand new users, it's all right to sit out on that one. It's all right to be a little patient, to wait for the absolute best of the best. You're worth it. All right, Gary, let's see what you did, bud. Gary says, small below the large are coming down, multiple divergences, and then looks like it just missed you. Tick or two below resistance, and it went for 2 ticks instead of 1 tick, Gary. That was a great read, and that was just an unlucky miss. Luciano, it missed him by a tick, and he said, but I've got every stinking advantage known to man. He gets that 8 range confirmation, is willing to pay for it, and takes it down to support. Luciano, great job using the confirmation on the divergence, on the 50-50. You paid a little bit for it. After that confirmation, put the second contract in on that little pullback. Nice job. George T. Same trades. And this was one of those ones, guys, we're seeing 2 entries away from the best of the best areas. When the conditions are this nice, spend a little extra money to get in a little lower. Or if it misses and starts the other way, you know where your stop goes. Good job, guys. Safia, you're saying, is this considered a bingo? Strong triggers, everything's coming down. You get in 2 ticks below resistance and it makes it beautiful. Exit at the first trouble spot. Exit at the second trouble spot. Safia. Nice job. You don't have my video? You can try reloading the screen. If that doesn't work, Safia, open up YouTube and get the live. But your trade, that short trade, Safia, beautiful. Start to finish. You didn't focus on anything but what was important, and it paid dividends once again for you today. Isn't it amazing how a little bit of refocusing goes a long way? Just a little bit of letting it be simple. I say it all the time. Not everybody believes me. I think we all believe each other at a different point, right? Gary, termination. Strong triggers indicate it'll retest support. How about strong triggers indicate it has the potential to retest support? It could have been a trade, or it could have been support that held to the tick. Ready? It could have been support that held to the tick and created a giant push back up. I'm not saying it's not a trade, but it's a trade where you give away the advantage of a clear path, and as long as you accept, that's a good thing. Joel F., good morning. Nice to see you. Let's see what you did. You missed the trade just like the video that was made. It was, right? Support holds, everything goes up, and it pulls right back to support. So Joel, 2 schools of thought. You don't have odds favorable or a clear path, but that chart reading, those patterns are going to get you every trigger agreed above support. Certainly worth taking a shot. Nice read, Joel. Very nice read. All right, NG time. Termination condition on the 13-2. You take a late entry directly into support, so you take first contracts quick and get to a 0 loss level. just in case this area decides to bounce. NG, a little late on your entry. A nice entry right at the areas makes this a more manageable trade for sure, but great recognition. Good job looking at it. Great job getting to a zero loss level. Same thing here. Earl, you guys all knew the challenges, right? But with this top, with this momentum, with everything saying down, a lot of you guys made the decision to trade right back to that potential trouble spot, and I think you did it perfectly. Nice job. Same thing, Gary, coming down. And then, Gary, this was the one right here. And guys, I know that market flow confirmation makes you feel warm and fuzzy, right? How to do another trade to it, Safia? I'm not sure what you mean. Guys, if you're gonna take a trade with this much momentum into an area with the potential to hold, the better your entry, the more manageable it is, right? Waiting for market flow confirmation is going to put you in almost right at your big trouble spot. He does have fantastic software, Joel. All you got to do is learn how to trade it, right? Keep it simple, keep it consistent. Ferrari makes a great Formula One car, but I couldn't beat any of those guys in it. I don't have the repetitions. And then Gary, it's crashing through fibs, isn't it? It happens. I like this. I really do like this picture. Because in the emotional moments, and this isn't, I don't think this is what Gary was doing. Maybe it was. He's got a big angry face there. But when you're emotional, right? When you are looking at a market that's gone without you, that you haven't made money in, if you're looking at a market that you didn't take profits where you wish you had, you're going to get frustrated. You're going to say, oh, look at it go without me, right? Look at it go, look at it go, look at it go. Don't get angry. Jose, there's your answer in the room. There's small swings. Crashing through fibs. But how many times does that fib hold for a reversal? How many times does that fib hold for a reversal? That fib, those one-to-ones. So what you're doing is you're trading a plan that statistically wins more than it loses. That was some pretty ugly typing. I apologize. You're trading a plan that statistically wins more than it loses. And what puts that plan together? Right? It relies on momentum. It relies on a clear path. And it relies on an entry at areas. Luciano, take care. So in the beginning, your statistical advantage comes from this very basic look, right? But as you grow with the software, Gary, as you take this picture over and over, you'll say to yourself, well, I've got odds favorable. I had a great top. This is a 5-1 synthetic fib. My 13-2 fib is down here below it. And I've got one line where this thing has the potential to continue from, right? Maybe this becomes your trade. If it's not your trade right now, Gary, don't waste energy. Don't waste energy being upset about it. Look at it, read it, study it. Make it your trade next time. I think what you did is you erred on the side of areas with the potential to hold. And then as you're coming through here, Claire, absolutely beautiful. Claire says, I don't want those synthetic fibs on my 13.2. I believe in momentum. Perfect entry, beautiful target, perfect entry, beautiful targets, and then chooses not to take the final one after a pivot stop out at support. Claire, beautiful execution. Safia, when you ask how to add another trade, do you mean a second contract? And then Claire once again, same picture. I'll show you in just 1 second. We'll get you taken care of. Claire, the trade's so nice you took them twice or post them twice. I like it. And then NG time, termination condition. Oh, nope, that was a 50-50 at the entry. No divergence, pulls back to the area with that much momentum. Gary, another opportunity, right? Coming into this fib with that much momentum with a great entry, there's room to manage. If that fib, that synthetic fib, is going to be the one that holds. But notice that price goes to the native 13.2 fib. These skinny fibs that don't go all the way are 5.1 fibs. These thick fibs that go all the way are the 13.2s. NG uses the 13.2 for a target rather than letting the 5.1 scare them out. NG, that's a great trade. Nice execution. John says this isn't quite as smooth as work. Gets in a little early on the momentum style. Takes profits, gets back in, takes profits, gets back in, takes profits. Hey Claire, I don't mean to alarm you, but it looks like John Novak is looking over your shoulder and doing what you do. All right, Joel. Whoop. Joel, that's a video. Yikes. Great video, guys. Joel just shared one in there. And then John reminds you on Monday, for the past 20 years, the day after Super Bowl has been a work holiday for Nexgen. So there will not be a class on Monday. I will probably be trading though, so if we're in here, we can still chit chat. Gary, termination, right? Large trailing could retest support. Large triggers below the reversal bar marker, Gary, absolutely. And it's not an HVA because the target's already been reached. After all of that down, and Gary, this is a great example. It's easy to be frustrated, right? Oh, it broke. It broke. It broke. It broke. It broke. Holy smokes. Look at that one. Held like a champ. Unless your crystal ball lets you know which one is going to break and which one isn't, or unless your extensive study, your time with the software lets you know when you've got the best advantage. Termination conditions typically may reverse the market. Termination condition creates a full reversal. Full reversal creates odds favorable momentum. If my plan says that I can take a trade from an area inside of favorable large triggers, even though divergence prints, guys, remember everybody's different, right? Some people will take strong triggers. Some people will stay in this trade. Some people say the smalls are outside of the large because of where it's coming from, because of where it has the potential to go. Some people will say, well, there was a loss of momentum and there's a loss of momentum. This isn't my trade. Or if it is my trade, this third loss of momentum in the same general price range will be enough to take me out, and it doesn't matter what happens next. You have to define what it takes to get in and what it takes to get out. All right, Miss Safia, are you with me? Guys, let's put together a 2-contract scenario. Click on these little dots next to ATM strategy. Bunk. And up comes your strategy template. Right now I've got order quantity 1. So what I want to do is change that to 2 because we're going to trade 2 contracts, right? And we're going to have 2 targets. So I'm going to have 1 target with one contract, and I'm going to have a second target with one contract. Now this is the S&P. If I'm looking for $100 and $200, my initial stop loss will be the same for both. I'm going to start it at 12 ticks, and then I'll adjust it above or below the window of opportunity. 8 ticks is $100 in the S&P. That's going to be my first target. 16 ticks is $100. That's going to be my second target. Are you with me so far, Safia? Once you put in those, let's give a picture just in case, just for the other people that maybe don't have their ATM strategies up. Once I have those in place, I'm going to right click out here in the gray field and manage my ATM strategy. And then I just have to name it. And I'm going to call this one my Safia Keeping It Simple plan. And I'm going to click Save. And I'm going to click OK. And then now when I go to my drop down, I can go to my Safia Keeping It Simple plan. And if I get in the market, my stop's in place, my targets are in place. I can click a line and move a target. I can click a line and move a target. And I can come through and do this, and I can hit close if it's not the right trade. So that'll get you where you need to be, guys. And it's that two-contract approach to management for new people that keeps it simple, that keeps it to where you don't have to think too terribly much. You can really kind of let everything play itself out. I'm going to leave you guys with the S&P for a minute. Let's see what happens when a termination creates a full reversal and gives us odds favorable momentum and pulls right back to an area of support inside of favorable large triggers, with the small triggers still outside of the large triggers. Guys, if you took a 86.52 entry, it went up to 92.50 before it blinked. Safia, your ATM strategy would have had $300 in the bank and you'd be out of the trade, or you'd let your chart reading keep you in as you look for that next key area. So guys, when I come back, I'm going to take just a minute. When I come back, I want you guys to post any questions that you have. I want you to talk about what you want to talk about. I want you to ask whatever you need to ask. And I'm going to give you guys some homework for the weekend. All right? I want you to brace yourselves. I'll be back in just a minute. All right, let's get into this last hour. I'm a chart reader, guys. That's your job. Your job is to be a chart reader. I was able to identify through Fibonacci, through trigger line location, where the market was likely to stop, no longer take short trades. This termination condition creates a full reversal that lets me know that this may be a bottom. This full reversal gives me odds favorable momentum, and while there aren't any opportunities here, ultimately I get that odds favorable momentum. There's that tail right to support inside of favorable large triggers. Notice that my small triggers remain outside of the large, letting me know that I have momentum on every chart in every direction. And because I have Fibonacci and I'm a Nexgen user, I know where the market is likely to go. And guys, look at that. If you had a target right here, you got filled while everyone else was hoping, and the market turned against it. Guys, welcome to Nexgen. That's a good looking exit, isn't it? All right, Paul. 50-50. Every advantage, divergence prints. Rock star entry. And it got you. That's okay. So, Paul, it's easy to say should have left your stop in place. Why should you have left your stop in place? What's the one thing on this chart that lets you know that we still have odds favorable to the upside? Small triggers outside. You're going to learn to trust that. Look at your 8 range. Every chart had odds favorable momentum. Every chart had small. That's okay. Don't be upset with yourself. Just learn from it. I can't tell you how many trades I've gotten out of early. Guys, when I first started trading live, oh, there's John. Got to be bigger than everybody again. Hold on. Let me get a regular size picture for John. When I first started trading live, I entered, it's still big. I would enter and then exit. And guys, at the end of the day, I'd have 20 trades and I'd be up like 8 ticks. And I would be down money on a winning percentage because I couldn't figure out my management yet, guys. But once you have the entries, the management gets easier. Once you start nailing that perfect entry, the management becomes easier. Gary, nice job. You were in on it as well. Elvis, you say you're labeling this the trust the next gen trade. Trust the strong triggers trade. I like that. Trust in the 21-3 trade. Trust in your rules. You called a long ago, all while realizing this trade could have been many trades multiplied for even greater. Good job, Elvis. Jose, late to the party, but still could dance. I love it. All favorable, good bottom. You're still in at the mid band inside of favorable large triggers. Guys, what got you out here? With this much momentum, what got you out before that target was reached? Just curious. 10 km, too close to the stop? Okay, no worries. As long as you had a reason. Stop was too close, you didn't want to give any back. Yep. Hey, 10 km, you say the triggers were half up and the mid band was red. Oh, was your O realizing that this was a 21 chart, not your 13-2? Guys, there's a reason simplicity helps. Can't stress that enough, 10KM. How do you build confidence? Stop looking at so many darn charts. It's a trend trade. 2 charts. Strong triggers, nothing in the way, pull back, go. You're looking at traffic in the oncoming lanes and trying to get mad about it when you're doing 70 miles an hour, right? Guys, keep it simple. Keep it simple. In 10KM, there's going to be times where it's appropriate to use this, right? Use the 21.3. Identify that you're not trading directly into a very key area, right? Use the 21.3 for odds favorable momentum if you're looking for some sort of edge trade. But if you're looking for a trend trade, the rules are simple. The charts are simple. Use the 2 charts or you're going to talk yourself out of a lot of trades. Not just you, 10KM. I'm talking about everybody, myself included. Gary, same trade. Everybody jumped ship before the fib. Did anybody hold for 94? John Novak did. I guess John Novak better trust the indicators. He wrote them. Why do you suppose John Novak held for the fib? Uh-oh, Dave B. Boom. Why? Ask yourself why. Why does John hold for the fibs? Dave B, why did you hold for the fib? And Dave B, this is absolutely perfect. You're 1 tick below, right? Am I reading that wrong? 94? You did. Good bottom, momentum. All right, guys. Sunday school answer. Are you ready? Here we go. You know what? Let's not even do this one. Let's go to the lot. Let's go back to that look. Let me minimize. This is what you're going to learn to do. The more time you spend with the indicators, I want you guys to see this. This was pretty big for me. Is there any indication that this market wasn't going to continue up? Is there any reason to believe that these triggers were mistaken? Do you guys see it? The 13.2 told you that you had momentum. The 13.2 told you that you had a clear path, right? So the 13.2 led the way. What kind of chart is a 5-1 chart? You guys remember? When I look at a 5-1 chart, it's an entry chart. It's a faster chart. All right. So when my 13.2 looks like this, and everything says giddy up, and let's just not even cloud it with anything. Let's just use momentum. Get that off of there. How do we feel about the momentum, guys? Rock solid, right? Everything's going up on your 5-1. What do we need to find an entry, guys? What are we waiting for on that 5-1? Do you remember? There it is. There's my reversal bar. So let's take a second And let's do some chart reading. Triggers on the 13-2 are strong.
Strong, nuclear strong.
Absolutely flying like a missile to the upside. Is the same true about the momentum on the 5-1? Is the 5-1 chart showing me the exact same odds favorable? Holy smokes, I love this look with the 13-2? Absolutely. And George T, after the first target, adjust your stop and go for the home run with the strong triggers. So as this market pulls back and it reaches that area of support inside of favorable large triggers, where are the small triggers compared to my large triggers on the 5-1? They're up and above, right? Still strong triggers. Has anything changed? The divergence prints, this pivot forms, I still have strong triggers. Just a little bit to push me back, but I've still got amazing momentum, guys. If you entered and those triggers remain outside and your 13-2 looks like this, guys, you got a great trade. And look what happens with all that momentum. Once it sorts itself out at the key area, once that little fight happens between buyers and sellers, absolute straight line all the way to Fibonacci resistance, because the 13-2 trigger said that that's exactly where it's going. Does that make sense? All right, chart reading. Guys, this is how good you're going to get at patterns. I am going to say that right here on this box, Sam, it depends. Where are the small triggers? Do you still have odds favorable momentum on the 5-1? If you're a brand new user, Sam, skip the trade, take the picture. It's okay. But the more you grow with the software, the more you're going to recognize that when these triggers are outside, you have a very definite advantage with this much momentum. Guys, I'm not looking at my fibs. I'm not looking at my mid bands. Would it be safe to assume, based on chart reading, that there's either a Fibonacci support or a mid band right here? How do I know that? Claire, that's probably going to be on capture side. Let me see if mine works, though, just to help. I'll take a picture of my chart real quick, because there's a great lesson here anyway. Mine is working. I'm not sure why. All right, guys, why do I think that there's a fib or a mid band right here? Because when price accelerates away from the large triggers and reaches an area, and the large triggers are more than a full bar away, price tends to close the gap. Does everybody remember that gap theory? You see it? So let's put the indicators back on. And let's see if that all the practice that I've put in to reading indicators is beginning to yield results, is beginning to help me identify patterns in the market. And you'll notice that the 13-2, before I hit this, went back to the same price level. But now my trigger lines look completely different on the 13-2. Now I've retested resistance. And look at the position of my trigger lines. And guys, there it is, right to support, isn't it? No short trades, even from a good top. No long trades. Paul, this is the exact same look from earlier where you said might be putting in a good top. You remember that? And Paul says, Sam, get your salesperson to set you up with market replay. then go nuts trading and taking pictures and dump those pictures on Mark and your salesperson. Don't dump them on your salesperson. Guys, dump them on me. Let me be the educator. Those guys have to sell. They don't eat if they don't sell. So give me your pictures. That's my whole job, is to look and talk, look and talk, look and talk. Do you guys see it? We're talking about patterns that repeat itself. I'm going to take a picture of this one. I'm going to show you why it's so important to study patterns. Mark Deans, guys, all your guys will help you, without a doubt. If you can give me the opportunity to help you, use me. I'm here for it. It's job security for me. Guys, I want you to look at this picture, and then I'm going to go to the user manual, okay? And I'm going to go right here to the termination condition section. And I want you to look at this picture. This picture was taken in 2021 about a market that reached resistance, that pulled back to support, that the trigger lines didn't follow. It retested the area, and that created a reversal. There's my picture from just a second ago. And now we're kind of in the moment, aren't we? The market repeats itself. Patterns repeat themselves over and over and over. In the beginning, you keep it simple. You keep it odds favorable momentum, no termination conditions, and look for that area inside of favorable large triggers. And then your ability to recognize patterns increases your ability to make money. It increases your ability to take more trades. Gary, you thought about an edge trade, but the momentum is too strong. Everything says up. Everything says up. Everything says up. Everything says up. Gary, do you have rules for an edge trade? Just curious. Same picture. And I ask, cool. So I'm going to help you out a little bit. What's an edge trade? An edge trade is utilizing a 21-3 chart. Okay? That's not my 21-3. An edge trade, because it's Friday and we've got time, right? An edge trade is using odds favorable momentum on the 21-3 to identify an area likely to stop the market. From that area, being able to identify and take a potential trade from an edge, but you can't trade into a termination condition. You can't trade counter trend, or you're going to end up giving a lot of money away. Termination down to support. 84, if these were strong triggers, would be your potential edge. Does that make sense? This isn't an edge. There's absolutely nothing there, and it's fighting the momentum. Does that help, Gary? You can't do an edge trade with just a 13-2. That's a counter trend trade hoping that a red line holds. Big difference. Very different results typically. So, nope. We don't even teach the edge trade because the edge trades happen. I'll show you when edge trades happen more often than not. We had one this morning on the S&P, and John sent me the absolute perfect picture of it. Let me go through and scroll up and steal it from our conversation this morning, because I've got a great example of an edge trade for you. Oh, we share so many pictures. Just give me just 1 second. Here we go. All right, Gary, this one's for you. If I can get it to open. right, so we'll just do it like this with Skype. So Gary, an edge trade, the 21.3, awesome, Sam. Use it this weekend. 21.3 says odds favorable momentum and absolutely nothing in the way. 13.2 has an edge, an area likely to stop the market that lines up with an area likely to stop the market that lines up with an area likely to stop the market that lines up with an area likely to stop the market. And everything is predicated on that 21.3 absolutely screaming in the direction of the trade. Does that make sense? This is trading with every advantage known to man. This is more hoping that that red line holds, right? And it may, but you're really kind of going a little sooner than you need to. Good stuff. And guys, I don't know if you've noticed this, but some of my favorite pictures are from when there is no trade, when there's just chart reading. And George T, with the trigger lines up, these down. I hope that's not a JN trade. That one is. Okay, that is right there. Sorry, I thought you meant up here. I was like, whoa. I love it. Termination, termination, termination. If this is really going to be a top, those triggers are going to roll. Guys, you remember that lesson? If it's really going to be a top, the triggers are going to roll. The first hit was over here, right? And nothing rolled. And then over here, everything rolls. And then there's the opportunity. Pretty cool, right? Patience. They say it's a virtue. Elvis, you got the first one in? Looks to me like your 21.3 is at an area of resistance. All the triggers are below. Resistance all below. Multiple divergences. Using that pivot just in case it decides to run up more. Nice job, Elvis. All right, guys. So Gary, what did the 21.3 say about support? Doesn't have the right momentum. But isn't that enough if you're using that extra chart? Isn't this termination condition enough to keep you from going long? It's too soon, guys. We are now in a glass box of emotion, waiting for a breakout, waiting to clear one of those areas where the fights are happening. Trigger lines are all above resistance, one of the patterns Elvis is probably recognizing. Large triggers are above the reversal bar, one of the patterns Elvis is probably recognizing. Saying this has the potential to push up or at least retest. Coming into an area, weak triggers, multiple divergences. Can we calculate where this market has the potential to push back to and retest? Based on the smalls down, based on the triggers rolling. If you go to that higher time frame based on a weak trigger look, it may come back and retest support. It may not. But with things changing here, it's probably going to waffle for a second. Two higher divergences on the 5-1. Large triggers still above the areas. I'm definitely not going short on this look, right? Absolutely, Elvis. I know you have a management plan in your head, but do you see how chart reading, just thinking about it, not so much. You can't post your pics on Snagit. Let me see if my Snagit, I know that it's letting me take pictures. Let me try and share it to screencast and see if mine will come up. You might just need to reboot, Claire. Mine appears to be coming up no problem. Let me post it in the room and see if it provides me the link, though, and everything works solid. And Claire, yeah, I'm good. I was having trouble with capture last week. And what I did is I went to my task manager and shut it down instead of just clicking the X. Because what happened is I was trying to click out, and then I was having trouble getting back into capture. So I went to my task manager, Control Alt Delete, hit the task manager, and I got out of the application completely. And then when I came back in, I had absolutely zero worries. So maybe that'll help you a little bit. Because I like seeing your pictures. I like seeing everybody's pictures. All right, guys, let's talk homework for the weekend. Market replay. How do I get a week's worth of repetition in 7 or 8 hours? Market replay. How do I get a month's worth of experience in a week? Market replay. Guys, you can increase the repetitions using market replay. You can go back, you can retrade a day as though it were live. You can practice your management. You can practice your entries. This video will walk you through it. If you have 2 monitors, have this video on one monitor, have your NinjaTrader on the other, and walk right through it. Guys, use market replay this weekend. The next thing, I want you to write a plan. Balloon and shark hunting. I want you to write a plan. I want you to take this example plan, and even if you don't change a thing on it, I want you to adopt it as your own. I want you to say to yourself, this is my plan. This is what I'm going to focus on next week. I'm going to keep it simple. I'm not going to be aggressive. I don't have to catch every move in the market. I don't have to wish. I don't have to hope. I don't have to form an opinion about whether or not an area might break or whether it might hold, because I've got this amazing picture that reminds me to stop trying to figure out what's going to happen and look at what has happened, right? Stop trying to be first. Stop trying to figure out if that red line's going to hold. Let it hold. Let your triggers roll. Give yourself the advantage. So write that plan this weekend, right? Why, Gary? You know what? Cool. Knock it out. It's not. Paul, all this is, let's walk through it. What is this? As price comes up to resistance, I think resistance will hold. That's it. That's all I'm saying. As price comes up to resistance, I think resistance will hold. I'm forming an opinion. But what do I have? I have strong triggers. I have green triggers. I have a green uptrend. Guys, everything says up, but my brain, because I want to be the guy that catches the first move down, my brain's telling me to go short because it's a red line. And then I do it again because I've formed an opinion. And then I do it again because I'm a yahoo that hates money. And then I do it again because, damn it, I decided this red line was going to hold. So it should hold because I'm really smart. D, I don't. I don't, but what happens is people see a blue line or a red line And they go, well, that's resistance. I said, I should go short. That's a red line. I should go short. And it's faulty thinking, D. It's our desire to be correct more than our ability to read our indicators and be patient. So the price right here, where the average new user forms the opinion that resistance should hold, is the exact same price over here where the trigger lines have told you that resistance held. I think it will hold. Resistance is held. And guys, the difference between getting blown out and being on the right side of things is the patience that it takes. If this area is really going to hold, these large triggers will go from green to red. These small triggers will get below. And guys, then we'll just look for a pullback, right? Elvis, the average new trader. I was clear. The average new trader tries to trade lines. Yeah, if you use the phrase, I think, I hope, I want, it may, then your indicators aren't giving you the information, guys. And this is what I like to relay to new people. It's okay to start saying, hey, this area has the potential to hold, right? Let's take a look. This area has the potential to hold, but I'm not willing to fight this momentum. Absolutely, George. Triggers don't roll. Triggers don't roll. When the triggers finally roll, there's one of those momentum style trades directly back to support. But do you see how there's a fight between buyers and sellers, guys? There's a fight going on. Now we can see it. It's between two Fibonacci areas. It's right between two Fibonacci areas. It's Friday lunchtime, guys. Give yourself the advantage of a clear path. Stop being concerned about what might happen and focus on what has happened. Because my opinions cost me money every time. You may be different. Your opinions might make you money every time. Mine tend to make me take a poor trade more than once. Ron, I absolutely love it. Path cleared. Get in with momentum. Take your money. Get out. Ron, I'm such a big fan of what you do, but I just don't see it in the moment. I've tried to do it on market replay, and I just don't see it real time as clearly as I'd like to be able to take advantage of it. Same concept, guys. I think this red line is going to hold. My trigger lines tell me that it's not. You notice that this trigger line never rolled? This trigger line never got below the area. If this area is really going to hold, these guys are going to do it. Ron, no class Monday because, man, it's kind of a next-gen tradition, to be honest with you. Whoops. It's a next-gen tradition. The day after the Super Bowl, don't trade, or we don't have class. A lot of it revolves around rule number 1. Back when we were younger and cooler, Super Bowl day, and I'll see if I can find a picture of it. Super Bowl day was a big party at the Novak's house when they were in the Woodlands, Texas, and we would turn the backyard into a football field. We would turn the backyard, we would spray paint it, we would build goalposts, we would hang out by the pool. John would rent like 10 video games and a trailer for all the kids to have something to do. And I'm looking for a picture right now. And it was just a big party. And if you know anything about John Novak, he's probably the best boss you could ever have. And he's very generous. And he likes to make sure that his staff is taken care of. So he would invite everybody over for the Super Bowl party. And it was just the day after, he said, take the day off. We kept you up late. We had a good time. We watched some football. I won't even say it. George, I've seen your trading. You shouldn't be going there much longer. So guys, market replay this weekend. Ron, if the rules are met, I'll take a trade. I think so. I think it's a great tradition because it gets me Monday off. And I definitely don't do things as aggressively as I used to. So I'm going to feel just fine. I'll probably be trading. No worries at all. Guys, red line has the potential to hold. Has it held yet? 100%? Are we confident that a good top is in place? George, I think you're there. I think you're pretty close. Are you doing Apex or anything like that, George? Trading other people's money? Oh, Gary, that wasn't for you. I mean, you can take it. But if it's really going to be a top, what's going to happen? Those green large triggers are going to roll, right? Those green large triggers are going to roll. It's not a top yet, guys. Waiting for the ES to break. All right. Guys, I'm going to share something with you just from an awful lot of chart reading over an awful lot of pictures over an awful lot of time. What you're witnessing right now is a fight between buyers and sellers. The buyers pushed it straight up to resistance and the sellers fought back. The buyers, with their line in the sand, of course, Gixam, pushed it right up to resistance, and the sellers pushed back, right back to support, and the buyers pushed back and lost momentum, and the sellers pushed right back. Guys, what you're looking at right now, and once again, I'll never... I don't know. I mean, it's a double top. It's a pivot stop out is what it really is. This pivot was formed. This took it out by a tick and then pushed down. But so is this. This pivot was formed, took it out by a couple ticks and pushed right back up. So what we're looking at right now, and this is what Fibonacci does for you. Guys, if you're new to Nexgen, the average trader gets chewed up and spit out inside of areas of consolidation. Guys, you have very clear rules that keep you out of this fight. Resistance to hold, support to hold, resistance to hold, support to hold. This fight happening between the buyers and sellers creates a very clear boundary, doesn't it? You can see exactly where the sellers are fighting. You can see exactly where the buyers are fighting. You're going to get one of those 50-50 trades, one way or the other. And after consolidation, 50-50 either wins huge or gets killed almost instantly. If you know that going into it, if you're willing to take that risk, 50-50 either wins huge because the sellers win or the buyers win, or it gets killed instantly because the buyers say, hey, let's make them think they have it, and then unload the guns. So right now we're at the bottom, right? The pressure's down. It's 50-50. There's no divergence. If it breaks, they're probably going down. Or Are they giving them a false sense of security? Are the buyers stopping them out? The sellers pushing down just enough to take her out of their long positions and then going? I don't know, guys. I don't control the market. Gary's posted my favorite picture there. I like to think of myself as a remora. Sharks are the deep pockets. D, does this make sense? And I don't even know what a bear flag is. I'm not going to lie. D, my only experience with trading is with Nexgen. I let these guys create tops and bottoms and give me momentum, and I try to be a remora. I don't understand the concept of a bear flag. I really don't. But what I do know is termination conditions. I know when I have an advantage, and I know when that advantage is gone. Does that make sense? Ride the wave. So D, my job, cool. My job as the educator here is to help you read these indicators the exact same way, to be able to recognize and believe in advantages, and be able to take advantage of it. And the cool thing is, guys, if you keep it simple for the first 30 days and you learn to read these indicators, as you learn more, you've already given yourself a skill set that'll allow you to make money while you continue your education. And it's nice when the market helps me out, right? A lot of you said, look, it's a 50-50. Oh, no worries. Hey, Paul, have a good one. Guys, remember, my email works even on the weekends if you need something. Check it out, guys. 50-50, smalls below, large above, no divergence. And then, gosh, there it goes. I love a clear path. I love a clear path. Everybody have a good week. Did you learn something this week? Did you move a little bit closer? Gain a little clarity? Guys, let's do this every week. Every week, I want you to ask your questions. You guys did an amazing job this week. Every week, I want you to post your pictures. Every week, until you're making more money than you can spend on me for Christmas, I want you to keep coming back and keep doing this. If you haven't committed to the software yet, guys, and I'm not in sales, I'm in education. Commit, get in there, tell your salesman, go, hey, let's make this official. I want that skin in the game. I want to study, and I want that motivation. I want that financial investment so that I can really, really commit myself to what I'm doing. I will. Thank you for that, Ziba. Guys, look at that. What are they doing? Patterns. Guys, I'm going to enjoy my weekend. I hope you do the same. I will see you guys Tuesday morning, 9 a.m. I probably will be trading Monday morning. Maybe I'll jump into the classroom. If you guys have questions, feel free to post them in the room. If somebody's here, we'll answer them. If we're not here, we'll catch them on Tuesday. You guys be good. Have fun. Enjoy the Super Bowl. D, no. Because me trading doesn't do you any good, does it? My ability to read indicators is different than your ability to read indicators. My trades may not be your trades. If you want to watch the market move and you want to see, go to the Nexgen page. There's a lot of videos where John's doing it, where he's talking about it, where he's entering, where he's exiting. It's got to be an individual sport. You'll learn more, D, from simulating on market replay, taking the trades, taking pictures, and posting them in the room than you ever will watching me trade. Because all you're going to do if you watch me trade is say, what the hell was he thinking there? What was he doing there? Why'd he get out? Why'd he get in? Rather than creating that foundation and saying, this is why he got in. This is why he got out. So every now and then in the room, we'll play with the simulator. But you guys do your trading. I'll do my trading. We'll take pictures and we'll meet in the middle and we'll talk about everything that we do. Take care, everybody. It's great seeing all the new names in here. I will see you all Tuesday morning. Be good, guys.